All right, if you're an investor on the hunt for reliable, growing income, you are definitely going to want to hear about this Japanese banking giant. Today, we are doing a deep dive into the dividends of Sumitomo Mitsui Financial Group, or SMFG, to see exactly what is behind their pretty impressive payouts. So let's get right to the number that's making income investors sit up and pay attention. 5. That's right, 5 straight years of dividend increases from SMFG. In today's market, finding a track record with that kind of consistent growing payout, well, it's pretty hard to ignore. And when you see that kind of consistency from a massive global bank, you gotta ask, right? How does a company like SMFG actually manage to deliver such a reliable and growing stream of income for its investors? Well, that's exactly what we're here to figure out. So, what does this growth actually look like in real terms? Let's start by digging into the hard numbers and really trace SMFG's impressive dividend path. I mean, just look at this. You can see that clear, steady climb right here. The dividend per share jumps from 70 yen back in fiscal 2022, and it's forecasted to hit 136 yen for 2026. Now, that's not just a little bump. We're talking about a 2.1 times increase in just 5 years. This is the exact kind of powerful, predictable growth that income investors are always searching for. So you might be thinking, is this just a happy accident? A string of good years? Nope, not at all. This growth is actually driven by a very deliberate strategy. Let's decode the company's official dividend policy to really understand the commitment that's behind this winning streak. Okay, the key to understanding all of this is a term called a progressive dividend. Now, this isn't just some vague corporate goal. It's a specific policy where a company says they are going to either maintain or increase the dividend every single year. And maybe the most important part of that promise is the commitment to not cut it. And hey, don't just take my word for it. This is a direct quote from Sumitomo Mitsui itself. Our policy is no dividend cuts, maintain or increase. It really doesn't get much clearer or more direct than that. This is a public promise, plain and simple, to their shareholders. But how do they keep that promise while also making sure the business keeps growing? Well, they do it by targeting a dividend payout ratio of 40%. What that means is for every dollar of profit they make, 40 cents goes back to shareholders as dividends, and the other 60 cents gets plowed right back into the company. It's a really sustainable model designed to fuel both the payouts today and growth for tomorrow. Okay, look, a strong policy is fantastic, but you have to have the profits to actually back it up. And that brings us to the engine behind these payouts, the company's recent Q1 performance. The latest results show that SMFG is already well on its way. We're only 1 quarter into the fiscal year, and they've already hit 29% of their full-year profit target. That's a really strong start that gives them a solid foundation for delivering on this year's dividend promise. So where's all this profit coming from? Well, a huge part of the answer is strong growth in their domestic loan business. And check this out. Lending to large corporations is up a staggering 18% year over year. This just shows that the core banking business is absolutely firing on all cylinders, and that directly fuels the profits needed for those dividend checks. A great track record and solid performance are fantastic, but as investors, we always want to know what's coming next, right? So let's turn our attention to the company's outlook for the future. Management has put a pretty big number on their optimism, a full-year profit forecast of 1.3 trillion yen. And that's not just a small increase, it's a very confident projection of continued strength and profitability. And this confidence, it's based on several key things management talked about on a recent conference call. For one, those negative impacts from tariffs they were worried about, they haven't really shown up. Plus, rising interest rates in Japan could actually be a big help for profitability. And on top of that, their pipeline for loans related to mergers and acquisitions is still looking really strong. Basically, the whole mood has shifted from uncertainty to a clear sense of optimism. Okay, we've covered a lot of ground here, from past performance all the way to the future outlook. So let's pull it all together and focus on the key takeaways for anyone interested in this as an investment. So to sum it all up, what do we have? First, you've got that proven 5-year track record of raising dividends year after year. Second, this isn't random, it's backed by a very clear and public progressive dividend policy. Third, it's all powered by strong, consistent business performance. And finally, the company's outlook is optimistic, with several things that could push growth even further. When you combine the numbers, the policy, and the performance, it really all comes down to one thing: trust. So we'll leave you with this question to think about. For investors who are trying to build a truly reliable stream of income, what's the real value of a company's promise?